So welcome everybody. Just need to go over a couple housekeeping items first while people are still arriving, but this is a Zoom meeting, so I would encourage you to keep your video off if you joined with your video on. You do not have permission to unmute yourselves. We do have about right around 100 registrants today, so be happy to answer your questions, but you're going to have to get them in the chat box. So feel free to do that. But this is kind of our next and what's becoming our series of hot topics. So this one is very relevant. It just happens not to be a tax topic. So we should probably all give ourselves a round of applause and cheer and thank God for that. So I did bring a couple other friends along today besides Steve. So Steve is alive and well. He's just a couple offices down, but brought a couple new people just to lend their expertise to this topic. So looking forward to that. Of course, you all know me. If you've been here for the past few years, just one item of note, I am about a year or two away from getting a new hobby, so watch for that. But otherwise, we should be good. So the first of my two new friends is Craig Covington. He is the first person that's been on these Zoom meetings from our technology division. And he's kind of a big deal with this Chief Security Officer title. So I'd like you to pay particular attention to him today as well. And we have Cherie Strozzieri joining us as well. This is not a misprint. She just joined us in August of 2023 here. And like any really great accounting firm or a great boss, we didn't even ask her if she's subject to societal's #1 fear of public speaking. We just put her right at the front of the line to do this. So pay particular close attention to her today as well. So, okay. So what we're going to cover here today is, a few things here. I'm going to be talking really about the why or what's happening and why. Craig's going to give you a few things to think about and look at in terms of just other issues to consider when moving to an online platform. And Cherie here is going to talk about a little bit deeper logistics of how to do that, what's involved, things of that nature. Now, one thing I want to just mention up front here is, again, we have about 100 people that reserved here, registrants. So we're going to try and keep this very broad. We know that you're all probably on QuickBooks Desktop because you registered for this. So we're just having to make the assumption today that we're transitioning to QuickBooks Online. There are other products out there, and QuickBooks Online may not be right. There may be other options, but for our presentation, we're going to stay with that assumption. So we're going to keep it broad. This is just kind of a high-level conversation, and it's one that is just meant to give you a further understanding so that when you talk to your advisor or your accountant, you go into that conversation with a little bit higher level understanding. So don't take this as a sales pitch or anything today necessarily. It's just, again, we're trying to disseminate information here. So, all right. So what does it mean that QuickBooks is going away? We're going to get right to it, not keep the cliffhanger, not kind of fool around. We'll just be straight up front with you and get it over with here. But technically, QuickBooks is not going away. We'll talk about that a little bit more. But Intuit has indeed expressly stated that their intention is to phase out desktop gradually over time. And they're well into that process. So if you look at the history of desktop, we perhaps remember all, you could go into Staples or Costco or whatever and buy it in a box, and you had your disk or CD, and you would load it and use it locally. And then at some point, they started to only support the previous 3 years and support running payroll, things, functionality in a way, some functionality, critical fixes, security patches, things like that. So right now, anything prior to 2021, you're no longer being supported. That program's not having any critical fixes, security updates, anything like that. I think in May, if I'm not mistaken, but in May 2021 will no longer be supported. So you'll be left with 22, 3, and 4. So in 2022, then they also they went from a one-time purchase to subscription pricing. And you needed a historical version to obtain any subscription, if you will. So they did that for a couple of years, and they just recently changed. I had a client, I think, bought a 3-year subscription this past year, even if not in the past few months. Now they're down to a 1-year subscription, and they're really jacking the prices up as well. So, and then they just made an announcement here in July of 2024 that they're not selling any new subscriptions at all. So after 2024, there is no new version of anything desktop that's coming out at all. Okay. So understand that Intuit has put everybody in a room, and they basically have closed the door. They're turning the heat up. The people that are in that room will, there'll be some people that go out of business. There will be some people that convert to other programs or convert to QBO already. But the people that are left in that room with QuickBooks Desktop will get smaller and smaller and smaller. And then at some point, they're going to put out a notice that says, hey, you've got about 6 to 9 months, I believe that notice is going to be. They'll put out, hey, as of, whatever, pick a date, September 1st, your QuickBooks will no longer operate. Okay. So then you're going to be out of a program, and they can do that with a subscription-based program. You can come in the very next day and your program will probably not boot up or something. So we're trying to be a little bit ahead of the curve, because if you have hundreds of conversions and things to take care of, we don't want you in the last minute rush, because that doesn't serve a purpose for us. It doesn't serve a purpose for you. So they've already, in my internet wanderings, they've already have discontinued in the UK and some of Eastern or Western Europe. All versions, including Enterprise, were discontinued. And again, I think they had about a 6 to 9 month notice at that point. So the fate of US Enterprise versions, we think, again, there's nothing overly definitive out there, but rumor on the street is they're working on maybe a little bit of a hybrid version that has a little bit in the cloud and a little bit locally, whether that's data and operation of the program, split or something. But the issue is Enterprise is a very, very robust program. And they're having, I don't want to say difficulty, but to get that much robustness up into the cloud, it's still a fairly new in technology evolution, if you will. So if you're on Enterprise, we believe that you're going to have, additional time. So they're down to 1 year subscriptions. Like I said, let's say for the sake of conversation, somebody just purchased a 3 year subscription. So again, I'm thinking somewhere in 1 to 3 years, it doesn't have to run out that 3 years. They can certainly issue a credit for the remaining portion of that subscription. But we think that you'll get past whatever date Desktop goes away, Pro, or any of the other desktop versions. We think that Enterprise is going to go past that for a little bit, but the ultra long-term goal is probably to get rid of Enterprise as well. And then to be clear, well, actually, I'm going to address that in 2 slides. So give me a second. So why are they doing this? It's fairly simple. Is if you understand, so they're supporting 3 years. So you have 3 years worth. And you go back to the days, some of us will remember the days of they had Simple Start or Contractor Edition or not for profit or Pro or Plus or Accountants or version. And so let's just say for conversation's sake, they had, whatever 7 versions a year that way, right? So you have 3 years. So now you're at 21 different versions between year and versions. And then you have 2 operating systems at least, right? You have Windows, you have Mac, So if you're writing a security fix, now all of a sudden you have to do that for 50 plus versions or platforms, if you will, instead of if you have it in the cloud and hosted in the cloud, you have one operating that everybody is sharing, and it happens automatically, right? So these security fixes, you go back to the days you had to download them, or even if they were automated downloads, Craig can attest to this. It didn't happen for some reason, things would get messed up, settings in the computer, and, go back quite a few years, and, software didn't like each other, so X software didn't like Y, and if you were running Y and tried to print in X, it would turn your computer off, or those just really goofy days. So this eliminates all that, and they can maintain one software up to date for everybody, eliminate all those support calls that they're getting as well, and do that. Also, another really big benefit of moving to the cloud, and again, I'm not a tech person, but programs in the cloud have what's called application programming interface, and we'll talk about that a little bit, but it allows programs that don't have anything to do necessarily with each other to talk with each other, okay? So there's a lot of efficiencies that can be gained by using integration up at the cloud level. And also mobile web and your tablets and cell phones and everything are all already cloud compliant, if you will. So programs can run on those platforms as well, right off the bat, largely. Okay. So Craig's gonna, what's the disadvantages of staying with QuickBooks Desktop? So if you have a version, again, I said technically it's not going to go away, but it's going to die a slow death. So if you have anything pre-subscription, so 2017, 2018, it will continue to run on your computer. But when, let's say, Windows 2027 comes out, it's not going to run QuickBooks 17 because it's just too old. It's not speaking the same language. I think we've all been there with really old programs that have just aged themselves out in operating systems. So yes, you can stay with it, but it's going to get more and more difficult in terms of running it locally as well. But there's also going to be huge practical issues. And Craig's going to touch deeper on the technology issues potentially with that and some other really good stuff. But right now, practicality is, local computers are getting all kinds of, remote access, firewalls, program file transfers. It's getting difficult. So I'm going to try and draw here, but not very well. But if we had your computer, we had the client's computer, right? Back in the days, we could transfer your QuickBooks file through some program, even going back to email days, very, very early, and we come over to our computer and we could work on it here and change it and do everything that we need to, and we could get it back to you. And that was the most efficient way to do things. We took the file, you stayed out of the file, we changed it around. If I had to change, 7 out of 300 transactions in office expense, I could change it at the source data and not lose an audit trail. So if those 7 individual transactions are out, I'm left with, the 293, and that equals the office expense on your return. Very neat, very consistent, very good. Okay, efficient. But right now, I need to jump ahead a little bit here, but the IRS insurances and stuff, they're getting to the point where they're saying you cannot have any unsupported programs running on your system. So the IRS came out and said to be IRS compliant, you need to have what's called a WISP, and a WISP is a written information security plan. And that documents the way that you are safeguarding client information. Okay. So we cannot have, according to the WISP, we cannot have unsupported versions of QuickBooks anymore. So literally, I do not have 2017 on my computer any longer. It doesn't boot up. I can't use it. Okay. So if you're on 2017, now we have your same client computer, right? We're going to maybe still transfer the file. I can't work on it. So if we transfer it to our computer, I have to update the version and then I have to work on it. And now I'm probably either I'd like to change the source documents, but I know I can't get this file back to you because I've updated it to say, what did we pick it on 17 here? So I'm at 24 version, right? I can't get it back to you. It doesn't work anymore. So I can do that, but now I have to duplicate my work here again, coming back to you in your system one way or another. I could send you journal entries. You could make journal entries. Sometimes you do, sometimes you don't, right? We could have multiple files, which is an issue. There's problematics now because we don't have the old versions available to us. So it's duplication of effort and time. And unfortunately, we kind of run on time here. So it's, now the duplicate work, the manual inefficiencies, time, the unsupported version you could lose. So there's a lot of practical implications here. If we do journal entries also, understand, so we go back to the 300 office transactions, right? If I'm doing a journal entry, I'm not documenting that journal entry, moving this check, that payment, this payment, that payment, and this payment, right? I'm just going to say to reclass. So now somewhere in your books and records, I have, say, advertising expense, and it's 1, 2, 3, 4, 5, and a journal entry, right? So now the IRS agent's going to come in and say, well, what's this journal entry that you're expensing on your tax return? And I don't have this the split out or the documentation necessarily right handily to answer that question. So there's a lot of practicality issues with keeping on a unsupported version. Again, it will work. I want to be honest. It will work, but it's not practical, and there's going to be duplication of effort, audit trail, things like that. So we need to keep that in mind. The other aspect of duplicating effort is, okay, so what's happening here at my office? Okay, so really quickly, we don't have to spend time on this, but nobody can find anybody to work, right? But accountants are especially getting hammered. So right now, think about this, 85% of the current CPAs are retiring in 15 years. So what's your average career? About 40 years, like just rounding, so from 25 to 65, let's say, for rounding purposes. So about 50% should be retiring in 20 years. I have 35% more people leaving the profession in 5 less years than average. So that is really, really going to put a lot of strain. Okay. And there's fewer CPA candidates than ever before. So there's not a cavalry coming. There's nobody coming to save the day. And indeed, we've had a net loss over the past couple of years in terms of our workforce overall. So it's going to leave less, less people to take care of the same amount of work, if not more work. God forbid we have another pandemic and all that starts going down again. But, we all have to change. Everybody has to change. And the number one reason everybody that calls is, saying to some extent that their CPA is not taking care of them. They're not timely. They're not whatever, So we have to do more work. So we need your help as well. Okay. So just understand this as well and take a deep breath. Don't log out of the program here. I'm not going to teach a history of accounting. I just want you to understand, a couple things and just the evolution in a short time here. But understand in 1992, and I chose this year, I graduated from college in 92. That's why I chose it. It's coincidental, and you'll see at the end. But everything was by hand. You had these type of sheets for your checkbook. If you had a fancy checkbook back then, we used everything. We had ledger paper, and would fill that out. And even the 1040, we did our tax returns by hand. Everything was manual. Okay. But then the computer came along, and, eventually you could, I shouldn't say eventually, it was pretty quick, but, Excel sheets replaced the manual ledger sheets. And eventually that Excel sheet would integrate with some kind of a trial balance or accounting program, and then that would integrate with a tax. But understand, this used to be manual in between these steps. And then eventually it did, start to integrate across. Okay. So that was pretty neat and started happening. And then we got to the point where, hey, our computers, whether it's the client computer and our computer, we could talk to each other. It became easy to send files back and forth. That's what I talked about earlier. We could send the QuickBooks files back and forth between us and you, and take care of it that way. And that led to some good efficiencies. But today, we're left with this cloud type of situation. And, everything was hosted in the cloud. and they were still kind of alone. The very early stages, they still kind of stood alone program-wise. But here's where we're at today, and it's pretty interesting in that, everything's up in the cloud. So no matter where you're at, it can be the client, ours, somebody else's, you all have access to everything, to one QuickBooks file, to one Excel sheet or Google Sheets, or one, drive, if you will, that, documents are stored on. In addition, all these things talk to each other at this point. So, Square can integrate with QuickBooks and stuff like that where it makes sense. So even though everything's up in a cloud, all these things are talking to each other, and they can all come down to the cloud and to wherever. Okay. So I just want to run through a quick example of, what is possible. So, and again, we're talking about QuickBooks today, but I want to do an example where QuickBooks isn't necessarily the center of the universe first, just to kind of lay out the understanding. But our client facing software, interaction software, if you will, I can send a invoice, and we don't do this, but the possibility is there, right? I'm not just quite up on it yet, but we can send an invoice, right, to you. You can get it on your phone, and this invoice is automatically. So on the first of the month, automatically an invoice goes out. You get it on your phone. Okay, you click on your phone, put your thumbprint in, and if we would utilize Stripe or some payment processing, it can come and that payment processing sends it back. Okay, Liscio records the invoice and also records the payment into QuickBooks automatically. We don't have to touch it. So by the first of the month, before I even step in the building, I may have invoiced you, received payment, and it got posted into our QuickBooks account. That's pretty neat. Okay, that's where things are going. So in terms of other examples is, I can send keep messing the pointer up, but I can send a request for a meeting, and you can respond to that request, and it will automatically book it in Zoom if it's a Zoom meeting, and it will automatically book in my Outlook calendar. So all these things are talking to each other. And again, we're going to pull in, document sharing, tax returns. We can take our tax return organizers through this software, send it to you, you respond to it, and it will populate our tax software. But, this is coming in another year or two per se. And again, if you pay, it goes right to QuickBooks. So again, all these softwares talking to each other really, really can create some efficiencies that we're going to have to, I say we, the accounting firm, and you, the client, are going to have to take advantage of in the future here. So understand what I just said then. So to bring it back financially, okay, we all know that banking credit cards now have download capabilities. So a lot of them can go right into QuickBooks. A program out there like a vendor payable, we utilize Bill. At a very high level, Cherie will talk about this, but you can scan your invoices in, those invoices get paid, and they get posted to QuickBooks automatically. Okay. Square, or a QuickBooks cash register. So if you're running a point of sale system, they can upload into QuickBooks automatically overnight. Okay, we don't have to touch it. And we already know that payroll can import into QuickBooks as well. So understand what I just said here is if you're on a point of sale system, I have now completely removed you as the business owner to any accounting function at all. Okay. Which is pretty neat. Everything's happening automatically. So in this case, this business owner, all they have to do is report payroll hours to us in this example. That's all they have to do is keep track of the hours and call them in. If you're a service business, so lawyers or somebody that's invoicing customers outside of a point of sale system for whatever reason, that's the only other thing that you have to do here is invoice customers. So it doesn't matter what business you're in, I can reduce it to payroll hours and point of sale invoicing and collecting those invoices. And there's a potential there to even remove that, but I think at this point, it's a little bit of a step too far, but that's on the horizon as well. So imagine that if we can remove the business owner cost effectively, efficiently, if you will, it frees up the business owner's time to spend more time within their business, working, making money, doing things that are a lot more valuable, right? The saying is nobody went into business to do their accounting, right? So, and your QuickBooks Online is always timely, okay? The month-end closing can be at a little as a few days after the end of the month. It's accurate since it's, being prepared and monitored by a CPA firm, okay? And it allows for continuity of function, right? So if you're in a position, well, what if somebody gets sick or leaves or whatever, you're not really in a bind. And other things like 1099 tax prep services become much, much more timely. Okay, so in this automatic import, I could be doing 1099s on January 2nd. Okay, and I don't have to chase you down, and you don't have to tell me that Johnny's having his wisdom teeth out. I can't get to it, things like that. It just happens automatically. So it's a pretty neat setup. Okay, a lot of benefits, and it's becoming very, very cost effective. We're back in the manual days. If we had to enter checks and do reconciliations and all that stuff, I couldn't charge my rates and be cost effective, but now it's there. So you'll hear this term automated accounting services, and that's really kind of what we're also talking about, a huge benefit of moving up to a cloud provided software, and they're all going there anyway. So it's pretty straightforward. It is what it says. Okay. You can piecemeal. It's not a all or nothing type of situation. So if payroll and vendor payables make sense, but a point of sale system or invoicing doesn't, that's fine. It can be piecemealed. And again, this is where I go back. This is not meant to be a sales presentation or anything. The solutions are going to be unique to you as an individual business. So all these things can be kind of tailored to what makes sense for you. Okay. So, and we do have a lot of non-Canon clients on the call here today. So again, I'm hoping that you can go talk with your advisor at a higher level after today. So all this to only say that it'd be a shame to kind of miss the opportunity if we have to change anyway. Let's not evaluate this on top of it. Okay. And, in a way, I thought that we were really behind the times, but the AICPA put a statistic out that only 30% of accounting firms can offer this type of service, and we're one of them. So I feel really good about that. I feel proud. And it's not like we can just do it, but we have a full-time staff dedicated to oversee that right now. And the highest compliment I can give her, and it's the office joke, but she's not a tax person. So it is a compliment to say that. So we can do it, and we have capacity. in February, March, April to do this. So it's really good feeling. So before I turn it over, I'll just state the obvious, okay? And I'm with you. Everybody hates change. You're going to hate, and I'm telling you, you're going to hate converting to QBO from desktop, okay? But we've all been here. It's just kind of the natural step in the evolution of things. And eventually we're gonna have to get there, you know, if for no other reason to be serviced cost effectively. Okay. If your accountant is taking your QuickBooks 17 file and working on it and sending it back to you, they are not compliant with IRS, all right, for your data. So, you know, a little bit of an issue. Craig will talk about that a little bit more in a second, you know, but desktop, I looked last night, it came out in 92, coincidentally. I think I first saw it in 98. So I was going to say it had a really good 25-year run, practically speaking. Think about that, 25 years, okay? And think about how much accounting has changed. I just said from paper to fully automatic in from 1992. So in 30 years, in less than a career, we went from totally manual to totally taking care of itself. So we just have to, it's something that we just have to keep going, whether we want to or not. So keep in mind, Cherie's going to come in. We'll have questions at the end also, but if anybody has questions right now that are not overly logistics, I can take them real quick before I turn it over to Craig. And Craig, you can go ahead and share your screen a while. And you're still muted, you and Cherie. Okay, so Craig is sharing his screen. I'm going to hop out here. Craig, I'm not sure you're able to unmute yourself if I don't
Yep,
hear.
I think I'm here, right?
There?
Can you hear me?
Yes, you are. Yep.
Good. Okay. All right,
Yeah.
Brent.
So I don't have any questions, so go ahead.
Good.
They're all asleep for you.
Yeah. Well, I'm not sure I'm going to wake them up. That's the unfortunate side, but please don't glaze over on me. I appreciate the opportunity to discuss some of the security aspects associated with this topic. You know, QuickBooks, as Brent has talked about, QuickBooks Desktop is going away. I wanted to just take some opportunity to go with some of the security sides to this. One of the first questions that I get asked when this topic comes up is, can I just continue running my older version of QuickBooks? And I know Brent has touched on this from a practical standpoint, but I want to touch about this from a security standpoint. Because the reality is, as Brent said, yes, you can continue to run your version of QuickBooks. It's going to operate. It's going to continue to run. You can do everything that you're doing today in it, but it's really not recommended. And you know, again, from the practical standpoint that Brent talked about, but also from a security standpoint, there are a number of risks of running unsupported software. Whether it's QuickBooks or whether it's some older version of a piece of software that you just love and can't seem to get rid of, there are definite risks of running unsupported software. The biggest one is the risk of data breach. This is the reason why governmental organizations and cybersecurity companies are basically saying you need to stop running unsupported software. Vendors do no longer will update vulnerabilities that are found within that software, and in turn putting your network at risk. What most people don't realize is if your computer's turned on these days, your computer is accessing the internet. Even if you don't hit Microsoft Edge browser or Google Chrome browser or whatever browser you use, if your computer's turned on, it is on the internet. It's live on the internet. As long as it's on the network, it's on the internet. With that, it's continually reaching out to pieces and places on the web. Even running an unsupported software like QuickBooks, that will reach out to certain areas, trying to get updates that are no longer available or whatever the case might be, but it is constantly reaching out. And these malicious actors understand that and know how to use those vulnerabilities to get into your system and not only breach your data for QuickBooks, but actually breach your entire network. This was found out the hard way by Marriott. In 2018, Marriott realized that unauthorized access was going on in their system for over 4 years, actually. They had purchased an organization called Starwood and came along with an antiquated reservation system. Because of that system that they kept running, over 500 million customers were affected by a data breach. Pretty substantial amount of information. Just recently, Comcast learned the hard way. I don't know if you guys have Comcast accounts, but most likely in December, you were forced to change your password. It came out that Comcast had a piece of hardware in their environment that a known vulnerability was found. A patch was put out for by the vendor, but Comcast took over 2 weeks to install that patch. And within that time frame, malicious actors had gotten into their network and gotten access to user accounts and passwords. While these are two large organizations, the reality is your data is just as important to these actors as Marriott's and Comcast's. They use it to target other organizations, to target other individuals. So if they can get some information from you, such as an email address, your business name, maybe an account number, they will actually use that to target those individuals and make their phishing attack more realistic and more likely to be believed by the end user and causing all kinds of damage going forward. So you want to protect your data. There is no doubt. And running unsupported software will not protect your data. One of the other risks of running unsupported software is fines and denied insurance claims. If you accept credit cards, you most likely will be receiving a questionnaire every single year that looks something like this. The credit card organization called PCI DSS sends out a questionnaire every year. And part of that questionnaire talks about a requirement to develop and maintain secure systems and software. What that means is if you're running an unsupported software such as QuickBooks, you are not maintaining secure software. So if you are actually answering yes to this PCI DSS question, you are falsifying your information on this questionnaire. And if the government finds out about it, they can fine you because of it. If you're answering no to this, or if you do answer no to this, which is the right answer if you're running unsupported software, they are actually going to come back and say, all right, then what are you going to do to remediate it? Because you cannot continue to run that software. Along the same lines, do you carry cyber insurance? If you don't carry cyber insurance, first and foremost, I would say you should be speaking with your insurance agent. It is becoming one of the most critical pieces of insurance you should carry as a business owner. These claims and fines and breaches are costing more and more and more money each year. So you should carry cyber insurance. If you do, or if you're looking at cyber insurance, you're going to be given a questionnaire. These applications, these questionnaires are getting longer and longer every year, but part of them actually have these questions, such as, do you have any end-of-life, end-of-support software? If you answer yes to this question, which is the right answer if you're running unsupported QuickBooks or other versions, you will either be denied your insurance, or your policy rates will be through the roof because of the risk associated with that. The other question is, are you compliant with PCI data DSS standards, which we just got done talking about? Once again, if you answer yes to that question, then you have falsified your information on your application. And if you answer no to that, then you're either going to be denied the application or your rates are going to be much higher. One note to talk about real quick with the cyber insurance is these applications are critical. You need to be very careful when you are completing them, because if you are completing them and you are not truthfully answering these questions, even if it's unknown to an extent, the insurance company is actually going to deny your claim if you do have one. They'd state right in their application that any misrepresentation is grounds for a recession of the policy. And so, you need to be real careful filling those out. It goes as far as to say travelers actually sued one of their customers, took them to court, and basically said, "Listen, we're not going to handle this claim because of the falsified information in the application." They basically, and the judgment was in favor of travelers. So, while cyber insurance is critical to businesses these days, and you should be looking into it, you also need to do it with real good, careful answers to those questions to make sure that you can get your claims paid for if that were to come about. The last risk of running unsupported software is extended downtime. Basically, either due to a data breach that we talked about earlier, which sometimes can take weeks or months to resolve. Data corruption. What if you launch that program today and for some reason it doesn't start up properly? What if your data is not your data file won't open properly? How are you going to go about getting that data file back? How are you going to go about getting that application back running when there's no vendor support? You're going to call Intuit and they're going to say, upgrade to the latest version of QuickBooks or move to QuickBooks Online, which is not going to do you any good at all when your data file is unreadable. So you really need to be very careful and make sure that you're staying up to date so that you have the support necessary when you have problems. So bottom line for that is the days of holding on to technology for more than 5 years is over. Small business owners are still wrestling with this and still struggling with getting an understanding of that. We're so used to having things that, as long as they run, let's just keep using them. If it isn't broke, don't fix it, basically. And that is just not the way technology works these days. Things are changing so fast. Things are changing so rapidly. Security updates, security features, multi-factor authentication being added to things for better protection, encrypting data, which means that, it can't be read when it's removed from an environment. Things like that are just continuing to be enhanced more and more, and older technology just does not have those features. Hackers are constantly evolving. We all know this. And with the advent of AI and machine learning, their tactics are just going to get so much better and so much harder to realize. So we need to continue evolving along the same lines. And then, as Brent talked about, the government regulatory compliances. FTC safeguard rules is just the beginning. There is no doubt. There is so much breaching going on out there. There's so much lax in security out there with businesses. The government's going to step in and be forcing businesses to become compliant. It's just a natural progression that's going on. And as Brent mentioned, we are no longer running any unsupported software so that we can be compliant at Canon Capital. with the FTC safeguard rules. So be prepared and really start to look at some of that stuff so that you're ready when these compliances start to come around. So the next question is, are hosted cloud applications the answer? I believe so. Yeah, I really do. Brent did hit on a number of advantages to them, so I'm going to kind of go through these a little bit quickly. But as we talked about earlier, pushing out new features, security enhancements is so much easier with a cloud hosted application. You don't have hundreds of thousands of installations of an application that need to get touched by multiple different businesses out there. It's done, it's one and done, it's out in the cloud. And when they update their software, everyone who uses it has the security enhancements. Vendors have a 99.8% uptime guarantee typically. What that means is, as long as you have access to the internet, you can reach that hosted cloud application. They have redundancies out there. Typically, their software is run on multiple servers at the same time. So if one environment goes down, within seconds, you're back up and running in another environment. You don't even realize it. You don't even know it. So uptime is critical there. Small business owners are very they don't like the subscription-based model because it's an ongoing cost. But the reality is, with the subscription-based model, you do have a known and consistent cost for budgeting purposes, as opposed to premise-based software where you're responsible for the updates. So you're going to have to hire somebody or let your IT company come in and do the installs. If there's something wrong with the application, you need to pay to have it troubleshot. You need to pay to have it fixed. If you need to do an upgrade to the next version, whether it's 5 years later or whether it's 2 years later, you're typically paying somebody to do that. And if you're not, it's still costing you time and energy and money. Whereas with the subscription based, it's you pay for the monthly, and that's typically what you're paying for. Along the same lines, hardware requirements are minimal. So you don't need a file server anymore in your environment when you're running hosted cloud applications. You don't need high-end desktop workstations, laptops. Your minimal requirements, hardware are there. So it's a definite savings there. And then, believe it or not, changes are spread out over time. While it might be a little frustrating with a hosted application when you launch it and go, oh, wait, they changed something, the reality is it's slow and spread out over time. Whereas if you're holding on to a piece of software for 5 years, 8 years, and then you decide to upgrade to the latest version, you've got 8 years worth of changes that you need to understand in that piece of software. The learning curve is huge when you're dealing with something like that, as opposed to the learning curve that comes with a change that's brought out over a short period of time. So you decide to move to a cloud hosted application. What are some things you should consider before moving there? There are a number of things that you got to be careful of. Number one, is your internet reliable enough? Do you have enough bandwidth? You might say, well, yeah, absolutely. I don't have any problems with people saying things are slow right now. Everything looks good. There's not an issue. But the reality is, when you start to bring in hosted applications, the amount of information coming down that internet pipe increases dramatically. You may find that application slows down all of your internet access, and you do need to increase your download and upload speeds to handle that additional traffic. What's your ISP's uptime guarantee? If your internet goes down, how quickly are they going to get it back up and running? How stable is it at this point in time? Does it go down every other day, or are you constantly having an issue with the internet not working? What happens if you experience hardware failure? Your Comcast or Verizon modem goes down. How long is it going to take them to replace that? Even internal switches and firewalls and things like that. Do you need to do some redundancies there? Should you actually have redundant internet connections if that application is critical to your business? All these are all things you should be considering when you're looking to move to the cloud. Who's responsible for business continuity? Who's responsible for backup of the data? Most people look at a hosted cloud and go, oh, well, I don't have to worry about backing up my data anymore. That's great. They're going to take care of it for me. The reality is that is not the case. Most hosted applications do a shared responsibility model. Basically, what that means is the vendor for the application is responsible for the global infrastructure, meaning the server hardwares, the network environment, connectivity to and from that information. Up again, as we talked about, updating the software itself, making sure security patches are on all that. All of that stuff is responsibility of the vendor. But most of them specifically tell you that your data itself, your content, your information is your responsibility to make sure that you have it backed up somewhere so that you can recover it in the event that you need to go back to a point in time and start over from there, or in the event that somebody does some massive damage to your specific data file and you need to recover that somehow. They also say that certain securities are your responsibility. Making sure your users are using strong passwords, making sure they're using multi-factor authentication, making sure you're setting up the roles and the permissions properly on those pieces of software. Those are critical. But the backup is really a big thing. Even QuickBooks Online, if you go out, and I did this, you go out and you do a search, do I need to back up my QuickBooks data? The response that you get right off the get-go is no, you don't. We take care of that for you. The reality is that's not 100% true. Again, they're going to back up your systems and make sure they're functional. But the highlighted things here, you can see if you use the standard versions of QuickBooks Online, not the advanced version, basically what they're saying is you're going to need to recreate any transactions that were deleted. Anything that you need to do, you need to recreate, whether it's going backwards, you need to go in and actually reverse transactions, or you need to recreate them. This one down here that you can barely see, but basically what it says is we can't restore your file to a previous point in time. Meaning if you do some damage to your QuickBooks today, you can't go back to the one version that you had on Monday, not through QuickBooks. There are third-party applications that will back up your QuickBooks data and allow you to restore to a previous point in time. And those are things you should talk to Brent and Cherie about, because we can offer you some options for that and allow you to have that functionality. But just understand that a lot of hosted applications have this, not just QuickBooks. Maintaining control over where the data is located. With hosted applications, what a lot of people don't realize is some of them will synchronize data automatically to the local machine. It allows things to run faster. It allows you to function. If in fact you do lose internet connectivity, you can still function. And it provides some backups and things like that. While that might be good in many respects, it also leaves you to realize that your data may be out on multiple computer systems spread out across multiple locations, and you don't actually know where it is. So be very careful. OneDrive, for instance, this slide here shows these check marks. That means that these files right here are synchronized to the local workstation, and if I go offline, those files remain. Realize that also if I leave your company and I still have these, those files remain on whatever computer system I have downloaded them to. So now I still have access to data that you may not want me to have access to. So just make sure you understand where that data is and whether it's being synchronized to the local workstation, and then what local workstations they're able to access it from. Which brings me to my last point of protecting against unwanted access. Um, uh, Obviously, we want to keep the malicious actors out. There's no two ways about it. That's the first unwanted access that we want to make sure of. We do that by using strong passwords, making sure multi-factor authentication is turned on. That's really critical for hosted applications because of their 24/7 accessibility. It's so much easier for a malicious actor to use credential stuffing, which means that they've found out that your staff's ID and password is out on the dark web, and they've tried it, and lo and behold, they decided to use the same ID and password to get into this hosted application, and now the bad guys are in. So be real careful with passwords. They're very important when you're dealing with hosted applications. Set up policies for when and where employees are allowed to access the application. These policies should specifically state that they can only access it between 8 and 5, especially if they're an hourly employee, because anytime that they're getting into your data, technically you should be paying them for that based on the new HR regulations out there. I'm not an HR person, so you should talk to your HR about that, but that is what their compliances are. Um, are they able to access it from their home computer system? The answer to that should be no. You really should not be accessing any company data using personally owned devices. It should only be company owned devices. Those are devices you have control over, so that if data is synchronized locally to them, you know where it is, you can get it back, you can get that device back. But again, if you're using personal devices, and that even goes for personal cell phones, that data can be residing on those devices and be a security breach, because those devices may be compromised and you don't even know it. And then accessing using home networks or public Wi-Fi's. So if you're directly accessing an application on a home network or a public Wi-Fi, even if you're using a company device, you really should be looking at using a VPN connection, which basically makes a private tunnel between the device and that cloud application that you're going to. Home networks, as I've said, can be compromised. Public Wi-Fi is absolutely a no-no, because that's easily compromised. And in doing so, you're going to be putting your data at network if you're not using a VPN connection. All of these things should be addressed in an acceptable use and or remote worker policy that you have in your employee manual. If you don't have one, you should be looking into getting them, especially prior to going and moving to a 24/7 accessible cloud application. So in conclusion, unsupported software is a no-no. Get rid of it. Stop using it. It's going to be putting your business at risk. You really need to look at finding other alternatives to use in place of unsupported software. Moving to hosted cloud applications is a viable solution for the reasons that we talked about. However, do your due diligence and research before pulling the trigger on it. You want to make sure that all of your ducks are in a row before you go out there, so that you don't put yourself at even greater risk by moving to a cloud application and not having the correct policies and procedures and protections in place before you move out. And then make sure you have an acceptable use policy and remote worker policy in place and acknowledged by all of your staff. And with that, I'm going to send it back over to Brent to see if there's any questions that need to be answered, and pass us over afterwards to Cherie. Thanks for your time.
Craig, I do have one comment that came in from Melissa, and if anybody else has anything, I'll take it at this point. But she says she's extremely concerned about all of my financial information being in the cloud. So could
Okay.
you address that?
Sure. So these vendors are compliant to all of these different types of regulatory compliances. Obviously, if you're talking about QuickBooks, that is not a risk, provided you are doing those safeguards I was talking about, which is making sure that your staff is not using password 1234 for their QuickBooks Online password, and even not using something as simple as their dog's name. Passwords need to be complex. They need to really, these days, they need to be 12 characters. They need to be having numbers and capital letters and lowercase letters and special characters, or these malicious actors are going to figure them out. They need to be unique. And most importantly, honestly, they should be using multi-factor authentication whenever it's available and possible. If you do that and you're using a legitimate vendor for your hosted application, you're actually at a greater security and greater protection for your data than you are on a premise-based network.
Okay. I had another question come in, and maybe this Cherie could maybe address a little bit early. We already sort of talked about this, but William says, I have used the web-based version before and hated it. It's not nearly as user-friendly as the desktop version. So I just want to stop right there, and absolutely, just tried to be upfront. We said you're going to hate it at first. But William continues on, are you aware of any plans for QuickBooks to have the web version adapt to a platform that is more similar to the desktop version?
Not at this time. They're not even entertaining it at this point.
Okay.
Sorry, William.
Judy says, hi, Craig. Isn't this just confirming that there's a great risk of data breach if our information is centralized at QuickBooks? Won't the size of QuickBooks actually make it a bigger target than a small fish like me?
So I'm going to address that, I think, two ways. First and foremost, don't think that you are not a target just because you're a small fish. As I mentioned briefly in my presentation, these malicious actors really don't care who they're looking after, going after. If it's a single person business, even if it's an individual, even if it's your home, they're looking to get into you. If they can breach you, there's a treasure trove of information they can get. Even if you're not storing credit card information, even if you're not storing social security numbers, which are the big ones, just them getting access to, as I said, to email addresses. If they get your entire email list, and they have your business name and they can get your signature that you send out for emails, they can use that to target, to do what they call spear phishing, other individuals that are on that list, and make it look very much like it's coming from you, which then may end up breaching a much larger organization that you do business with, whether it's one of your customers or one of your vendors. They may hit a multi-billion-dollar organization because you do business with them. So your data is very valuable to the malicious actors. And I think we all need to kind of get our heads wrapped around that pretty quickly, because until we do, these guys are just going to continue to wreak havoc on businesses and individuals. Secondly, yes, you're right. Obviously, the size of QuickBooks, it makes them a bigger target. But you got to realize the size of QuickBooks makes them have much greater securities in there. So the reality is, um, uh, you're you're having data on your own premise is a greater security risk than having data in QuickBooks. I can guarantee you your network is nowhere near as protected as Intuit's network is, unless you use us as your technology company. No, I'm just kidding. Um, but seriously, that's really a big part of why it's much better to put it out in the cloud.
Okay, and one more that just came in. I think this is for Cherie ahead of time. But a sales rep from Intuit said there was an app that you could use to make QuickBooks Online look like QuickBooks Desktop. Is this true? I knew there used to be back in the day, but I think that may have gone away. But Cherie, do you know anything about that?
I do not. It is a great question, and I will make sure to research that, but I
Okay,
haven't come across that at all
Uh,
in a
if
hundred.
if I can chime in real quick, and again, Brent, I don't know if it is the older. I do know they did used to have it because I
they
used to
did.
use it.
I used
Uh,
it.
I wouldn't say it looked identical to QuickBooks Desktop, but it was certainly much better than the web version.
Mhm.
When I was doing some research for this, specifically for QuickBooks data protection and backup solutions and so forth, I did see an option to download that desktop app once again.
Oh, okay.
So they may have resurrected that.
Okay.
Um, but yes, Cherie, if you want to look further into it, I think they may have resurrected it though.
Okay. If there is one, I would, you'd want to recommend it because it is aesthetically, it's a really big change. And like I said, Craig used it. I used it. It was really nice back in the day. But then I know it went away for a while. So if they have resurrected it, that's really good news. So, all right, Cherie, I think you're up. We'll get you going here.
Okay, good morning, everyone. I hope everyone is well and enjoying and not falling asleep. My goal today is to provide you with a general understanding of QBO and cloud-based accounting. It's, as we've mentioned and beaten into your heads today, it's even more difficult now to find a desktop accounting package. All manufacturers have already begun transitioning their products to an online version of some sort, and everyone else will follow suit, I'm sure. So, as mentioned, the future of accounting is automation and integration, regardless of the software you choose to use. So although change is difficult, as Brent had mentioned, the progression is necessary to achieve time savings, increase efficiency, accuracy, and improved security measures. And then for today, there's many products out there that are online. But for today, as Brent had said, we're focusing on QBO. Excuse me. For the clients already on QBO, QB Desktop, transitioning to QBO is the most logical step. For anybody that's not currently using an Intuit product, there are ways to convert your information into QBO. So if you're looking to switch to go to QBO, you won't necessarily lose all your information. So I'm not going to lie, as we've been discussing, transitioning to QBO is a learning experience. It looks different from the desktop version. The reports are called different names for some reason I don't understand. And it's just harder to navigate. As William mentioned earlier, it is not as user-friendly as desktop is. When I first started 100 million years ago, QB Desktop was the most popular version of an accounting software package, and was great with it. I loved it. QBO came along and I was miserable, absolutely miserable. I didn't like it, but I persevered considering my choice of career. I had no choice but to persevere. And now I'm so used to it. I would never go back to the desktop version. So you'll adapt. Transitioning from the desktop version to QBO is virtually painless. You create a QBO account, you migrate your information over, and you're pretty much done. Normally, I would suggest if you're going to attempt this yourself, that you print out financials from your desktop version and compare them to financial reports from the QBO version. We can assist with that migration and conversion process. It should take just a few hours, depending on the size of your data migration, but the benefit of utilizing your advisor or your accounting firm and doing that for you is that we have access to Intuit's migration team that is specifically set up there to work with accounting firms who are migrating their clients from their desktop version to the QBO version. They do the comparisons, they do the data review, they do everything. And within 24 hours at the most, you're up and running the next day with your QBO account. So the additional benefit, of allowing us to help you with the migration is you receive discounted pricing on the QBO packages. QBO has several different versions, and you'll get they'll have a little promotion that says, oh, 50% off. And then when you look at the fine print, it says for 3 months or for 6 months. Our pricing for you will stay the same. So the accountant pricing will not change unless, of course, they have a global increase in pricing, but and it's usually, close to half. So that's a real benefit for allowing us to assist you with creating your account and migrating your information and enrolling you within the QBO programs. Sorry, I lost my train of thought. So QBO offers various subscription levels depending on your business's need. So the 4 most popular levels are Ledger, Essentials, Plus, and Advanced. Plus and Advanced would be the closest in proximity to the Enterprise desktop, if anyone's considering migrating to that. The biggest disadvantage that I've come across with QBO is the fact that you can't have multiple entities. So our clients or people out there that have more than one company would need more than one QBO subscription. However, if your company is a parent company and then you have up to 10 businesses under that, you can get your second, third, fourth, fifth QBO account, which would be the exact same account. So if your parent company enrolls in QBO Plus, your other 10 enrolled companies will pay $20 in tax for the QBO subscription instead of full price. So that is a consideration. And they are working on something because apparently they receive multiple complaints daily that, hey, I have 6 businesses and I don't want to pay 6 QBO subscription prices. I didn't have to do that with my desktop version. So that's, again, one of the biggest disadvantage that I have found in my years of using QBO. All right, so there are many advantages though. So one would be secured storage. The conventional way of using accounting systems can be vulnerable when it comes to security. Backup systems can be problematic. multi-versions of your file can be out there. QBO at least eliminates that problem. The other problem is, again, as Brent has spoke about, transferring information back and forth to your accountant. It eliminates the need to do that. And without you having to do anything, it keeps you compliant with the FTC, IRS, and any other, things that require you to be compliant with security measures. Okay, so access from anywhere. Oh, look, you skipped my security. We're moved on to the next one, Brent. Okay, access from anywhere. This is where I would like to be, somewhere on a beach or in Maine. Having access does help you, because we all like to have access to our information from wherever we are, and it helps you make decisions and perform tasks on the go. And it's an important feature, I think, but we do urge you to be mindful of the suggestions that Craig had discussed about security measures. The next advantage is faster processing. The automation inherent in cloud-based accounting systems speeds up routine tasks and helps cover more ground and process more data. Automating key processes can prevent duplication of entries and other manual entry errors, which ultimately saves us time, which is what we're all looking for. For us, it allows the month, quarter, and year-end closing procedures to be completed much faster than currently. And with the cloud-based accounting, you will only have one data file. So we're eliminating the risk of multiple employees using different data files, working within, different versions. You'll have the ability to set access permissions for your employees, from as simple as they can only run reports and that's all the information they can see, to company admin. So you're always in control of what your employees are able to see. This feature, of course, is particularly a benefit for us, your accounting professionals, especially at year end. It eliminates the need for back and forth, data being sent back and forth, and then waiting for us to return it to you so that the entries or adjustments that we made get entered and our books stay in sync. So QBO eliminates that necessity. And the other benefit of that is, if our books ever differ on QBO, we have the ability to determine when an entry was made to make the QBO out of sync with what our records on your tax return. Real-time transactions pretty much speaks for itself. Given the ability to automate most functions within cloud-based accounting software, things like human error is reduced when accuracy and efficiency are increased. Utilizing tools such as recurring transactions and journal entries help to keep your records up to date. So these are tools that are inherent in QBO. If you have, for instance, a depreciation or accumulated depreciation entry, you can automate those to post directly to your accounts monthly without anyone needing to go in and make it. Obviously, we review it and make sure that everything is accurate in case there's any adjustments that needs to be made. But that improves so that when you click on your QBO account, your numbers are what your numbers are in real time, versus at the end of the month when your accounting staff or bookkeeping staff, whether it be outsourced or in-house, gets to doing the reconciliation. Integrating bank accounts. Integration with external applications is a key benefit of cloud-based platforms. Integrating your bank and credit card accounts is simple with a click of a button. By using this feature, your transactions are downloaded directly from your financial institution, and they're held in a holding area called bank transactions within QBO. You have the ability to review those transactions for accuracy, make sure everything's posting correctly. It does have an AI feature, so it will learn that, hey, if, Staples, my staple orders will always post to office supplies, things like that. It does take a little time to set up in the beginning, as with anything, but it will learn and it will post correctly to the correct expense and income accounts. I'm sorry, I feel like I'm rushing through. So it is a benefit. The ultimate goal with utilizing the banking and credit cards coming in is eventually your accounts will self-reconcile, which means when you go in to perform the reconciliation, they're all in sync. Your balance is zero. Click reconcile now, you're done. If that number does not say zero, then you know there was some type of manual data entry. Maybe you recorded something that didn't really hit the bank. So it's another way of assuming not assuming, I apologize, of knowing that what's happening in your bank or credit cards accounts are the only things that are posting in your ledger accounts. But 9 out of 10 times it comes to a zero balance if you're utilizing that tool. Okay. So integration with payroll processors, I won't go into detail with that because Brent did. Your payroll information comes in, it's logged directly into QBO. You don't need to do anything, and your payroll will tie in at the end of the month, quarter, and year end without needing to make any type of journal entry adjustments. Integration with payable management. There are many companies out there. We're focusing for the purposes of today on Bill.com. It is what most of the clients that I have had utilize. It's very easy and user-friendly. So basically you email to a dedicated Bill.com email account for your company. Then from that email, Bill.com will extrapolate the information, create the invoices or bills within their platform. It does sync with QBO, so whatever you add to Bill gets automatically transferred into QBO. When you go to pay your invoices, you log in, it lists all your invoices that are due and how many days it's due. You click off what you want to pay, and you hit pay. You're done. And then it's a two-way sync. So if you use it opposite, where you're entering information into QBO initially, QBO will sync with Bill, and those invoices will appear in the Bill system as well. Same thing with the payment. If you pay it online, a lot of people like to pay their vendors online. If you do that, it will, and QBO then will show paid. Bill will also show paid, and that invoice will be removed from the payables system. Another feature that Bill has is called spend and expense. So for anyone that is issuing credit cards for employees' use, this is a program that helps reel in the spending and helps the tracking of it. So you're given basically a line of credit. Let me mention that this is a charge card. These programs, they are charge cards, not credit cards. The difference is a credit card, you have the ability to pay over time. A charge card needs to be paid off the end of the month when it's due. So it's not giving you the ability to carry it over. You do get the ability to set dollar limits on different cards. So one employee you may only let them have a $500 limit, while the other employee gets a $5,000 limit. You are in complete control of it all the time. When that employee uses their card, they will get a notification that you have to approve this purchase, and right then and there, you have to pick an account that it's supposed to post to. Once you approve that, the transaction is approved and it is automatically synced in bill, then will automatically sync to QBO. So there's no waiting for receipts or anything. Your account will update and reconcile, and you don't, that's all you have, that's all you have to do for it. So the beauty of the program is for the tracking of the spending. So you have an idea where your money is going, what your employees are doing with their credit limits. And as I said, there's no waiting for them to let you know they did something. You'll know immediately.
So Cherie, I'm just going to interrupt for a second. We literally have like one more slide, I think, but we are sort of at our time. So if you have any final questions, get them chatted in, and we'll get them answered in just a couple minutes. So.
Okay. So the difference between automation and integration briefly is just automation are programs that are inherent within the accounting package. And then integration are outside programs that you can connect to QBO. So apps. New app integrations are being added every day in QBO platform that have direct syncing benefits, which means they sync without intervention. For example, a platform such as Square, they share a two-way sync if you're maintaining them as your POS system and utilizing inventory, it syncs with QBO. And vice versa. So anything you do in QBO goes back to Square. For programs that don't currently automatically sync with QBO, there are bridge programs, which is an application that helps with integration. So for different POS systems, you can simply download your sales information from the POS system, upload it into a bridge program. Once set up, of course, everything initially requires a setup. You map your data that needs to be mapped. And then from there, the information is converted and a journal entry will be automatically added to QBO. I have an example. I had a client, a daycare facility, so they use daycare specific software to record tuition, attendance, things like that, a lot of non-financial information, but basically their sales, or their tuition, which is drilled down to their class sizes. So they had 10 classes and, they wanted to keep track of tuition for each class entry, infants, toddlers, preschoolers, they're all broken down. At the end of the month, we would download a CSV file and then upload it to a bulk converter. Once we had mapped everything out, create a journal entry, put it in, and the exact sales, how they were paid, everything's recorded, whether it was check, credit card, you have access to all that information in QuickBooks, so that when there was a franchise, so that when their franchisor wanted to see their financial reports, they could pull them themselves, and all that information is exactly the way they wanted to see it because it came directly from their software, industry specific software, and that's how it's added into QBO. So basically it would have taken us hours to enter each of those things separately and manually, where it literally only took 7 minutes once that feature was installed. So there's a lot of other programs out there that you may use that you can integrate with QBO, and they'll all require setup, but it's worth it in the long run. Okay, so in summary, as we've drilled into your head, during this presentation, the future of accounting is integration and automation. And although QBO is a standalone program, so you don't need to utilize all the things we're explaining today in order to run QBO or use QBO, but it really is important if you're looking to save time, efficiency, accuracy, all the things, to make your life easier, which is basically what this does. But you don't have to use it to use QBO or any other cloud-based software. We have the ability to work with you on any software of your choice. But that's it. Thank you for making time in your schedule today to be with us. And I'm going to give it back to you, Brent.
All right, thank you. And I appreciate everybody hanging with us for a couple minutes. One favor I'll ask you before we get to the final questions is, we just did this for free for you, an hour and a half. And I would really appreciate if you could take 5 minutes as a thank you and just hit us with, a positive Google review or something like that. If you could do that for me, really appreciate that as a thank you for what we've provided for you here today. So, and of course, like I said, we're hiring. I don't know that we have a job description up right now or an ad, but if you know anybody that would like to get into this newer area of accounting, it's not the stereotypical that we're dealing with. So, so at this point, I'll take any final questions. We have 2 real quick, but if nothing else, we already have our next hot topic next year. So I actually have to pull this up a little bit. Unfortunately, it is back to a tax topic. So boo, I know, but we'll have to go with it. So I don't make the topics, they come to me. So so real quick, Jack asked, so now I use my desktop for both my business and my personal bills. So on QBO, I will have to get 2 separate subscriptions. Yes, technically, the second one, we didn't really talk about Ledger a whole lot. That's a new area that QuickBooks is developing out online. And Cherie, that's $10 a month, I believe, right? And that's used for just record keeping. So think rental properties or very, very simple businesses and individuals, So if you're not running payroll, or what are some of the other things, Cherie, that
Inventory,
things like
it
that.
Basically, it keeps track of your income and expenses.
Yeah.
So if you have things, like depreciable assets or things like that, it's not the version you want, but for your personal, keeping track of your personal, yes, absolutely, it would work for that.
Okay, so it's cost effective for that, most likely. Rita says some client uses a Mac and we have PCs. Will QBO work for both of us to access?
So yes, QBO does have a Mac version. I have migrated from a Mac to QBO while on a PC. So
but you can access both the QBO from either operating system.
Correct.
It's one QBO.
Correct. The initially, if you are setting up a QBO, if your data is that you're using desktop for Mac, it's just a different file that would have to get sent to be migrated. But yes, you can access it from either kind.
Okay. Let's see. I don't know what this is. Amy says, is there a place to find out what third-party software platforms are compatible with QBO? Our church uses a donor software called Service Keeper and online giving platform from a company called Venco.
So Venco does not have a direct sync, but they do a download where that can be uploaded through the bridge, and we have used it. So And
Okay.
it downloads all of your donations and things like that and sets it up. We would map it, or you would map it, however you wanted to see your income broken down.
Okay.
This work. I'm not 100% a ServPro, but there are QBO forums that you can simply search, does ServPro connect with, or I'm sorry if I got the name incorrect, but does it, sync with QBO and things like that. And then there's a place in QBO called apps, where you can get different applications that will link with QBO.
So the answer is most likely, if it doesn't do it direct, which would be preferable, we can still use that bridge, or somebody can use that bridge software through a CSV file. So most
Correct.
likely, as long as the software does that.
Right. And the bridge program is housed within your QBO file. So it's not like you're going into a separate program just to do that. Like it's
Okay.
one step. It's in your QBO. You would open it from there, upload your file, and send it on its way into your books.
Diana asked, who from Canon Capital do we contact to discuss discounts and pricing available if we switch to QBO? That would be Cherie. If you haven't noticed, I haven't answered any questions or taken any responsibility here today. I'm giving a presentation on something I know very, very little about logistically here. So,
and yet I can't shut up.
So we talked about that question a little bit, a bunch of thank yous. Which online version would be most closely resemble Pro Desktop version?
I normally start, so you can upgrade or downgrade your subscriptions. My normal recommendation for most of my clients, if you're not using classing feature or inventory, is QuickBooks Essentials. But if that's initially when you set it up, it'll ask you what type of industry you are. And when you give it that information, it does gear your chart of accounts toward that industry. So, but I normally would start with Essentials because it's usually perfect for everyone. Again, if you're utilizing inventory or classing, you would need to start with Plus. And then if you wanted to do different types of features, you can always upgrade to Advanced. But in all of my years, I've only had one client that utilized Advanced.
And David, just to jump in with the question, none of the online versions are going to closely resemble Pro Desktop version.
Aesthetically, yes. Yep, we've said that. So, okay, I think that's it for the questions. So I appreciate everybody hanging in there. Every year I'm like, how are we going to talk about software being phased out for an hour and a half? And yet here we are, So I appreciate everybody hanging in there. Thank you to Craig and Cherie for being told to do this and showing up for work today.
And obviously, I do not have a fear of public speaking.
So with that, we'll let you go. The contact information's on the screen, our website. So feel free to reach out if anything comes up, and we're here to help. All right.
Thank you. Have a good day.
Thanks for joining us.